All right, so we've already been bullish or not bullish, bearish on the higher time frame. We've just continuously rejected PD arrays. All right, this was kind of the sign to be bearish going into Tuesday, since Monday failed to close above the consummate encroachment of this fair value gap. So that's why Tuesday kind of sold off, and then Monday was just the high of the week, which can happen. It's not always the case, but this can happen, right? Um, and so we were pretty much stuck. Thursday was an inside day. You guys can see was inside of Wednesday. So that means that Friday should be an expansion day. That's why I was pretty aggressive today. But going to the 4 hour, or we can look at the daily too, real quick. A lot of people wanted to see this daily fair value gap get hit. Um, this did not need to get hit because of the 4 hour order block. So this to me is a good enough order block. This was created during London session, so this you guys can see this was a 2 a.m. 4 hour candle, closed below here, the opening price. That would be your change in the state of delivery. So seeing that this up close candle continues to reject price, to me I didn't want to see this get wicked above into this daily time frame or daily fair value up just because we've been so heavy. And so going to the 4 hour once again, wicks are gaps as well. So you guys can see if price failed to even hit the consummate encroachment of this largest wick. If we do use this one, it still failed to hit that, but I would prefer to use this one just since it is the larger wick. And we also have that 4 hour order block right here. So this would be our order block. Make that red. And so now we can go to the lower time frame. Um, Understanding that we have NFP at 8:30. 8:30 is now going to be our main concern, and you guys can see we have midnight and the monthly open. So price rallies above midnight and the monthly open right into that 4 hour order block, right into that 4 hour wick, and this is exactly what you kind of want to be seeing when you're looking for a potential reversal. You guys see how weak this candle body is when it closes back into the range after tapping the key level? That's exactly what you want to be seeing. And we have all these relative equal highs up here, which would be considered too clean, as ICT teaches. So this would be your turtle soup. Some kind of stop run has to occur before you get your actual move. So this will be your manipulation leg. So there's a sequence that I want you guys to study. It happens pretty much every day. If there's 8:30 news, then use 8:30, like there was 8:30 news today. But not every day is there 8:30 news. But it's just a sequence of 8:30 to 9:30 to 10 o'clock. And so normally, in this instance, this is a perfect example because 8:30 there was NFP release. So if we look at the 30-minute time frame, you guys can see price open highs above midnight into this BPR. Look at the candle body, right, of that 30-minute fair value gap, telling the story the whole way. So if 8:30 is distributing, 8:30 is confirming that our bias is correct. So now what should 9:30 do? 9:30 should manipulate. Why would 9:30 manipulate? You need a stop run, or you want to see a stop run in the opposite direction before you get your actual move. And you guys can see here's 10 a.m. 10 a.m. was the distribution candle into previous weekly low. So going into this, you guys can see this institutional order flow entry drill. That shows that price is very, very weak. We barely tap into this 30-minute fair value gap. Open high, and then we close lower. I was using the 15-minute in this case, and I'll show you guys. I'd pretty much always use the 15-minute instead of the 30-minute. I normally like to go 15 and then the 1 hour. But this is why I was very bearish off the open. So you want to, everybody knows to break their fair value gap down into, the 50%. But a lot of people don't use the lower quadrants. And so all this is the GAN box, and then you turn on the 0.25, 50, and the 75. So we can extend this out right. And you guys see how price is respecting this lower quadrant. If we zoom in, you guys can see the 15-minute candle bodies are failing to close even above the lower quadrant of this 15-minute fair value gap. That is very bearish. So now if 830s has already confirmed our bearish bias, We want 930 to have some kind of stop run, some kind of manipulation. Breakout traders are chasing this going long, etc. Right? As ICT always says, this is just a volatility injection, so that's why 930 is your key time. What do we have? We have a stop run into what? 15-minute objective. That's our 15-minute key PD array. This is your 930 turtle soup. Now we've done all the hard work. Now what do? You go to whatever time frame you enjoy to enter off of, and you can look for your entry. So this was the best entry here after this 1 minute order block was confirmed. You guys can see here. Here's the lower quadrant of that 15-minute fair value gap. Price has a form of a stop run here, 917. Takes the high exactly at 930, and then closes below this two up close candles, making this your bearish order block. And it leaves a fair value gap, so that's how you know it's a real order block. NFP week is going to have mohawks. This is what ICT classifies as mohawks. You guys can see that price was coloring outside the lines a lot. It wasn't as precise, but that's because it's NFP week. That's the only reason. Also, it was right off of the open as well, so you can expect that. So I didn't go short here just because I got smoked one time on Wednesday. I actually went short right at 9:30 because I didn't wait for the fair value gap to close, and then I got souped, and then it went lower. So I waited, but I should have trusted that this high was going to be the turtle soup high. But regardless, you don't even need to catch this the very top right to have a profitable trade. So what I was really looking at was this fair value gap here, and a lot of you guys do trade inversions. That's Desi's model. So we wicked it once, wicked it twice, and so my focus was on this order block and this fair value gap. We started to displace here, and we also closed below this fair value gap, as well as closing below these next two series of up close candles. This is a propulsion block. An order block created off of another order block is your propulsion block. So this 1 minute propulsion block should give you the expansion move. And so that's what exactly where I entered off of. Not the propulsion block, because I didn't even really want to see this get used. But once again, NFP week, you have to allow price to color outside the lines. That's why you cannot have a very tight stop. So I went short right off of this volume imbalance low, which was the inverted fair value gap low. And my stop loss was at this high, because in my head, this is a balanced price range. Price came down, traded back to this, rebalanced this inefficiency, completely closed this in, traded lower, wicked this again, wicked back up, retesting the actually the propulsion block would be created here at 936. So that's why I use this here as my stop loss. So this is a balanced price range. We go lower, we come back higher, and then we finally knife through this fair value gap, and we use this propulsion block or this wick as well. And so understanding that this high shouldn't get broken, that's why my stop was here. Since we open high and immediately touched this wick after creating it, after closing below the opening price, that's why I thought this high should be protected. So I went short at 12, 112 exactly. Stop loss was here. And my first take profit, or my full take profit on my XFAs, was this 830 low. And so you guys can see that was a 1.9R trade. So almost a 2R, but good enough. I wasn't exactly sure if we were just going to sweep this and then come back higher, but I was expecting that previous weekly low, so I did hold a runner for that. I'm going to mark that out quickly, and then I will go back to where I was holding a runner. Whoops, I shouldn't have done that. So this was your previous weekly low right here. Make this red, and we can go back to the 1 minute and then go back in replay mode. So understanding now that I was 4 of my 5 micros off after this low got hit on my Tradeify account. And you guys can see I almost got stopped out, right? Price is coloring outside of the lines. Even this 1 minute fair value gap got inverted, but the draw is still lower. So you guys can see this 946 candle just knifed through all of this. And I did go break even as soon as this low got broken. You guys see how wicks are gaps? Price uses this upper portion of this wick, goes higher, almost stops me out, and then goes lower. So as soon as this displacement happened, after completely rebalancing this area, price hit my TP1. Also, there was 3 PD arrays protecting my stop loss. So we have the inversion fair value gap here. We have the normal 1 minute fair value gap here. Make that green. And then we have the propulsion block. And you guys can see, if I mark out the 50% of this propulsion block wick, the candle bodies are refusing to close above that. That's very good. And that's all it retraced to, and then knifed lower. So 3 PD rays in front of my stop loss, inside of a balanced price range that I thought would hold price, and it did. Seeing this low being right with a timed rejection block, I wanted to see speed through this area. That's also why I went break even here. And you guys can see all price did was come back a little higher. Institutional order flow entry drilled into this 1 minute fair value gap. Barely taps it here at 9:57 during the macro. And then the 10 a.m. news, time and price, sends price right into previous weekly low. So any PD ray can get inverse. This would be bullish rejection block. We're not expecting bullish PD rays to hold. You guys can see that price uses as a level of resistance and then goes lower. So at this point, you guys already know my entry. I was entered at 112, so right here. At this point, I did zoom out to the 5 minute, and I wanted to see if I could trail my stop. And since we had a 5 minute candle closure below this candle here, I wanted to see this 5 minute order block hold, and then particularly the 5 minute wick. And so I went back to the 1 minute, and I was already anticipating this to really stay as a breakaway gap. If anything, your stop loss has to be above the 50% of the fair value gap. So now I have 3 PD rays again protecting my stop loss, even my trailed stop loss. So I was targeting 107 points as my final take profit, right? I had this fair value gap here, the rejection block inverse, the 5 minute order block, and then this upper 1 minute fair value gap as well, and also this 1 minute order block. So I have a bunch of PD rays protecting my stop, so I did trail my stop. As soon as I saw us started to wick into this upper fair value gap, I wanted to see it stay below all those PD rays, moving my stop based off of logic, not just because I want to make more money. Right, my stop loss was here, so that last take profit was 129 points. But that was pretty much the trade breakdown. It's very, very simple, just based off of the logic, understanding that really, if you guys get anything out of this, just focus on the 15-minute lower quadrant of that fair value gap acting as resistance, and then having that 930 high get put in after the stop run here, and then putting in bearish PD rays, and price starts to respect bearish PD rays, so now they should hold until the draw on liquidity is met. You guys have any questions? Hopefully that wasn't too fast. I'm going to end the recording here though.